Here's the biggest myth about lender's mortgage insurance, also known as LMI. So LMI is what you pay to the bank as an insurance policy if you buy a house with more than 80% loan to value ratio. So that means you're borrowing more than 80% of the value of the property. So you pay that lender's mortgage insurance. So a lot of people don't want to pay the lender's mortgage insurance because it is quite expensive, especially once you start borrowing 90% of the value of the property. But just consider it in another aspect or in another light. If you're only having to put down 5 or 10% deposit on a property and that property grows in value by say 10%, if you're putting down say 10% deposit, that property grows in value by 10%, you've actually just doubled your money. Now at the moment you've seen a lot of property values softening in a number of different areas. There are still a lot of areas where property prices are actually continuing to climb, and those areas are the ones that are tightly held. There's still really good buying opportunities and those properties will continue to perform. So if you do want to buy a property and it's above that 80% LVR, loan to value ratio, which means you don't have that 20% deposit, it's a really good way to leverage the deposit that you do have and just get into property, especially now when there's really good bargain to be had and there's a lot less buyers in the market. Now is the greatest time to buy for the next property cycle.